Hi, everybody. Welcome back to Ox Talks. Thanks for watching the show today. Please like the videos if you enjoy the content. Thumbs up button for me. Share the videos with people as far and wide as you can. A lot going on right now with the economy, with the markets, with politics. As we know, we are just 5, 6 days away from the election. And please, if you're not subscribed, hit that subscribe button for me. Two articles I want to share with you today. One is on gold. It is on a tear. Close up another $10, $11 an ounce today. I show it right now sitting at $2,788 a troy ounce. Silver had a little bit of a correction today, pulled back a bit right around the $34 mark. But gold just seems right now unstoppable. Not trading advice, not financial advice, just sharing with you what is going on. I saw an article that came out yesterday from Goldman Sachs, and it addresses the gold price and what they think. Goldman Sachs being a big bank, you understand that the big banks don't like gold. They don't like silver, right? They are, not something that they like to talk about. They don't like to come out and give a positive news on the metals, okay? Because it obviously is a source of freedom for people. It's a source of having assets and liquidity, outside the traditional banking system. And so to see a big bank like Goldman Sachs come out and give this kind of a take, I think it's worth all of us paying attention. So it says gold predicted to climb higher than expected as records shatter. It says gold is forecast to climb higher than previously expected as central banks in emerging markets have ramped up purchases, according to Goldman Sachs research. Gold usually trades, they say, closely in line with interest rates. Meaning usually as you see interest rates come down, you see the gold price rise because the opportunity cost of holding gold becomes more in parity, right, with putting money, let's say, into the bond market. It says as an asset that doesn't offer any yield, it typically becomes less attractive to investors when interest rates are higher. And it's usually more desirable when rates fall. While that relationship still holds, central bank purchases have been a powerful force, resetting the level of gold prices higher. Since 2022, Goldman Sachs research analyst Lena Thomas writes in her team's report, and it says the precious metal is predicted to rise to $3,000 per troy ounce by the end of 2025. Thomas writes, gold's risen to multiple all-time highs this year. I believe today is another all-time high. Again, leave your comments below if that's your understanding that it closed at another all-time high or close to it. Again, Goldman Sachs saying $3,000 gold by the end of next year. Obviously, we're almost there now. Okay, now will we see some pullbacks here and there? I think that's natural in any market. But apparently the trajectory right now is really only going in one direction for gold, especially as we have uncertainty right now with what's going on in the Middle East, uncertainty with regard to what's going on with the elections in the United States. It says Thomas points out that the relationship between changes in the gold prices and changes in interest rates still exist, but sizable central bank purchases of gold bars have reset the relationship between rate and price levels since 2022. So Goldman Sachs research estimates that 100 tons of physical demand lifts gold price by at least 2.4%. Well, I'll tell you, gold price has gone up a lot more than 2.4%. I believe just since the beginning of the year, it's up 30 some odd percent, maybe even more than that, outperforming, I believe, the broader stock market indexes or indices. Also, I don't know if you guys watch Two is One. He primarily talks about gold on his channel. I've been following it for a while, and I watched his show earlier today, and he's indicating that the data is showing that we have a massive inflow into gold ETFs by the West, okay, and maybe a little less or less central bank buying on the East. Again, I haven't verified that, but if that's accurate, which I have no reason to disbelieve what he's saying, then we have demand by central banks continuing, and now we have gold ETFs catching fire. And again, whether you hold physical or whether you're playing the paper gold market, it all does have an impact on the spot price of gold, okay? I prefer physical. I've discussed that before on this channel. But again, it all goes into the attention that gold is getting right now, okay? It says concern about the risk of financial sanctions is likely one of the reasons central banks have increased their buying of gold. Emerging market central bank purchases of gold have risen notably since the freezing of Russian central bank assets in 2022. Again, that's kind of old news. I think that's already long been baked in the cake from one person's opinion here in terms of the gold price. Says Thomas also points out that central banks in developed markets have tended to have relatively high holdings of gold as a share of reserves. For instance, it says the U.S., France, Germany, and Italy have gold holdings that make up 70% of their reserves. Again, you guys leave your comment below what you think the U.S. Gold reserves are, okay? And if there's any money sitting, any ounces sitting in Fort Knox. It says policymakers also appear concerned about the debt sustainability of the United States. Okay, they have good reason for that, which has about $35 trillion of borrowing, amounting to 124% of GDP. Okay, many central banks have the bulk of their reserves in U.S. Treasury bonds, and policymakers may be increasingly concerned about their exposure to fiscal risks in the United States. I think that is absolutely happening, and for good cause. The debt levels are going to be, unfortunately, the end of this country. When the debt bomb explodes, it is going to be probably something like none of us have ever seen before, okay? It says ETF holdings. Here we go. Many Western investors have been nervous about chasing gold prices higher, Thomas says. Some think they've missed the rally and are wary of buying gold at all-time highs. Says Goldman Sachs research expects gold holdings in Western exchange-traded funds, right, ETFs, to gradually increase as interest rates fall, which would be in line with their historical relationship. Even as central bank buying of gold may be moderating, okay, this goes to my point about 2-is-1's video from earlier. There could be some competition for gold bullion between central banks and Western investors as gold ETF holdings begin to climb. Interesting, right? What does that mean? It means you're going to have potentially a supply issue, right? If even 1% or 2% of this country or of the world, had money invested into or decided to put money into the gold markets, there's a lot of data out there about what that would do to the price of gold. So let me stop with gold right now. I'm watching again tonight open up the metals markets, and gold's up a little bit. Let's see how quickly it runs, if it does, to 2,800. Again, not trading advice, not financial advice. The next story is a big deal. I've done several videos over the past months about data breaches and how it's impacted hundreds of thousands, if not millions of people across this country and the world in different sectors, banking sectors, financial sectors, medical record sectors. Here's another one. This is out of Fox News today. Massive data breach exposes 800,000 insurance customers' personal information. So over the past few months, we've seen a wave of data breaches affecting millions of people, from health care giants to government contractors and more. The latest incident is yet another in a long line of alarming breaches. Now the insurance administrative services company Landmark Admin has warned that a data breach from a May cyber attack impacted over 800,000 individuals. Of course, it's from May, June, July, August, September, October. 5 months it's taken for this to be publicized now. Landmark Admin has partnered with some of the largest insurance carriers in the United States, including American Monumental Life Insurance Company, Pellerin Life Insurance Company, and American Benefit Life Insurance Company. Through these partnerships, millions of policyholders and their sensitive information, such as names, social security numbers, driver's license numbers, and passport numbers, could be at risk of exposure, it says. In a report to the Maine Attorney General's office, Landmark revealed it spotted unusual activity in its systems May 13, 2024, prompting it to disconnect affected systems and block remote access to its network. They brought in a specialized third-party cybersecurity team to help secure its systems and run a thorough investigation to understand the extent of the breach. But while they're looking into it, the hackers managed to break back into Landmark's system on June 17th, 2024. It says the cybersecurity team findings show data was both encrypted and stolen from Landmark systems, and hackers may have gained unauthorized access to the personal details of impacted individuals, which it could include, again, full names, address, social security numbers, tax ID numbers, driver's license numbers, and state-issued ID numbers, passport, bank details, medical information, health insurance policy number, date of birth, and details about life and annuity policies. Okay, I don't think you get a more all-encompassing list than that. Go back and listen to that again. That is insane. Landmark is offering free identity theft protection services for those affected by the data breach. It's also notifying us as everyone whose personal information may have been in its systems during the breach. Individual notices will be sent by U.S. first-class mail going out in batches as they identify potentially affected individuals. The first wave of letters was sent October 23rd. Again, 5 months after the first breach, and at least 4 months after the second breach is the first notification these people are getting. And these hackers have had this information for all this time. Think about the risk not only to financial security, but to personal security. When they have home addresses, they have all this private information of people that were in these databases. This is very, very scary. What's even more scary is why the delay. Why in the age of communication that we have, everything is immediate. Why can't they get notices out immediately saying, look, there's been a breach, we're investigating it, but please be aware. So again, I don't know. It's always easy to Monday morning quarterback these things, but that seems like an awful lot of time passed from the known breach date to the time that first letters are going out just about a week ago today. I'll leave it there, a little long today, 12 minutes. Again, thanks for watching, thanks for sharing, and thanks for subscribing. I'll see you all soon. Bye.